Have you ever struggled with analyzing the trend completely wrong, resulting in you being faked out or the price is totally reversing on you? This is something that all traders go through, and in this video I'm going to show you the perfect indicator to break through that barrier and become a profitable trader today. Introducing the Bayesian Trend Indicator. Okay, so what this indicator actually does is that it describes the probability of where price is moving and trending next, based on previous movements, events, and conditions in the market. Okay, so easily put, this indicator uses both fast and slow moving averages, including the EMA, SMA, the double exponential moving average, and also the volume-weighted moving average. So what this indicator does is that it gives you a numeric value depending on how strong your current trend is. So if the trend probability is higher than 50% or 0.5, the indicator will create green candles, just like this. And if the trend probability is lower than 50% or 0.5, the indicator will instead create red candles. And to make it even more simple for you to understand the current trend, you can always take a look at the dashboard right over here. And as you can see, the indicator shows you the exact percentage of the probability of where price is heading. And this makes it so much easier for you to understand the current trend and also get better and more precise entries. Okay, so in order for us to get into a trade with the help of this indicator, there are a couple of rules that we need to follow. And in this first example, we're going in for a long position. Rule number 1. In order for us to get into this trade, we only go in for a buy when the indicator is giving us green candles. And this, of course, might seem super obvious, but bear with me. Rule number 2. Price must first create a green candle showing bullish movements. Price must then create a drawback to the downside, just like this. Rule number 3. And after that drawback that we just saw right here, then price must close above previous highs. And this is to make sure that price is creating higher highs, which is an indication that we are actually heading to the upside. If price is not closing above previous highs, then wait till it does, or wait for another setup. If it doesn't, never push or chase trades. Always let your trades fall into your lap. Rule number 4. And the most important part of any type of strategy is good risk management. So remember to always aim for a risk to reward ratio of at least 1 to 2, 1 to 3, and of course higher. You should never risk more than 3 to 5% of your account. Build your account over time. A greedy trader is a failing trader. Okay, so for example number 2, we are now going to do the exact same thing but on a short position. Rule number 1. The indicator must create a red candle and the numeric value below that candle must be below 0.5 because this indicates that price is trending in a downwards direction. Rule number 2. Price must then create a drawback to the upside for this strategy to be valid, just like this. Rule number 3. Remember that price has to close lower than previous lows for us to be able to take this trade. And since you can see that price hasn't closed below this previous candle right here, then all we have to do now is wait. And as you can see, price is now consolidating for a while, but if we fast forward just a little bit, you can now see that price has finally closed below that previous low over here, and we are now ready to get into a short position. Rule number 4. And just like in example number 1, we always have to implement good risk to reward. So we always aim for at least 1 to 2s or 1 to 3s and higher. This is because if we hit a 1 to 3 on this trade, that means that we can lose 2 trades in a row and still be in profit. But that is of course only if those 2 lost trades also had good risk to reward. Every single trader loses trades, but only the traders with good risk to reward are still profitable, including those losses. That is actually it for this time, guys. I hope that you enjoyed this video and that you found it valuable. And if you did, please smash that subscribe button down below. And I'll see you in the next video.